the blockchain experience. Bringing dope content to the audience. Welcome to the blockchain experience. Bringing dope content to the audience. It's the blockchain spell. Maynard David's got so much to tell.
Hello, GM, and welcome to another episode of the Blockchain Experience. I'm your host, Money David. Today's guest is Professor Tonya Evans, and she just wrote a book called Digital Money Demystified, which we talk about on the podcast. As you'll see, Professor Evans is very knowledgeable in crypto, both the technology and legal aspect of it. In fact, she is a lawyer and a law school professor by trade. She's also the founder of Advantage Evans, where they produce online adult education services, and the flagship course being From Cash to Crypto. I haven't had too many guests on the show to talk about crypto specifically because it's such a nuanced topic and the universe of people credible enough to speak on it is very small. So we're fortunate to have Professor Evans here on the Blockchain Experience. So we'll get to the interview shortly. And after the interview, I'll give a quick update on the podcast. But before we do all that, a word from our sponsors. Ledger is the smartest way to secure crypto holdings. Their hardware wallets are trusted by over 4 million customers. Ledger can be used to secure, store, and manage over 1,800 crypto assets. Using the Ledger Live app, you will have a one-stop shop for your crypto needs. Buy, sell, exchange, and grow your assets with Ledger's partners securely and easily. Stop getting your wallet drained. Head over to ledger.metadavideth.com and take self-custody today. Have you ever wanted to display your NFT art in the physical world? Look no further than Token Frame. Token Frame's patent high-quality physical displays start at 10 inches and run all the way up to 55 inches. They're truly built for authenticity. Just sign in with your wallet, connect to Wi-Fi, and cast your NFTs. It's really that simple. And best of all, no subscriptions. Token Frame supports Ethereum, Polygon, and Solana with Tezos on the way soon. It's no wonder they're trusted by OpenSea, SuperRare, Nifty Gateway, and more. Start flexing your NFT art by visiting tokenframe.metadavideth.com. Again, that's tokenframe.metadavideth.com. Professor Tonya Evans, welcome to the Blockchain Experience. How are you?
I'm doing great. Thank you so much for having me. I appreciate this. And any time to wonk out on my favorite topic with someone who is equally in the rabbit hole is always a good day for me.
I love it. So you are an expert in crypto and IP law. You've been on CNBC, Bloomberg, Yahoo TV, amongst many other places. And I know you've got a book coming out in October that we'll talk about in a little bit. But just for the benefit of our listeners, can you introduce yourself?
Sure. I am a tenured professor of law at Penn State Dickinson Law School. And also I have a co-hire appointment at the Penn State Institute for Computational and Data Sciences. I am not a technologist by training, but I've always, one, as an intellectual property lawyer and then law professor, I teach things like various intellectual property surveys. I focus mostly on the copyright side. I have a patent attorney for a mother, but I didn't have a science background, so that wasn't in the cards. But I've always been intellectually curious and often an early adopter of technology as well. I fell down this quote unquote rabbit hole back in 2017 is really the first time that I I'd heard of Bitcoin, this magic internet money, but didn't really understand or certainly see the connection to blockchain technology. And I became fascinated in the space through that window, really trying to unpack what it meant in the copyright world in particular, when you have an open source software platform on which others would try to monetize. So it was the age of the proliferation of tokens in the Ethereum ecosystem. It was the ICO, the initial coin boom, bust, and all of the securities issues that were coming up. But I was interested specifically in the intellectual property issues. I didn't know a lot of intellectual property lawyers that were thinking about and talking about this issue. And in one of the first law review articles that I published in this space is titled CryptoKitties, Cryptography and Copyright. And it was around that time, 2017, 2018, when CryptoKitties was all the rage / not rage. I remember presenting that paper at some very big platforms, and basically people were booing me and throwing tomatoes. I was a bit ahead of my time, but that was what cured or piqued my curiosity. And quickly I realized that in order to fully understand and appreciate why decentralized technology and this decentralized or distributed method of protecting and securing data was important, not just for the first use case of virtual currencies in a peer-to-peer manner of exchanging value, but what it could mean more broadly. So that was my kind of entree into the space.
So you bring up a good point because of the decentralized nature of blockchain. You have this like openness, and then you come from like an IP, you're an IP lawyer background. So how do you reconcile the tension between the two? Like what opportunities did you see there?
Such a great question, because it reminds me of so many conversations we had kind of at the end of kind of like in the late 1990s, early 2000s, when peer-to-peer technology was disintermediate or disrupting, I should say, the entertainment world, right? For those who won't be able to see me, I have kind of air quotes for file sharing, which quite a bit of it was copyright infringement. There are a lot of non-infringing uses, even when you don't have permission, but necessarily that area when I think of like Napster, Grokster, obviously BitTorrent, which is still around today as well. Peer-to-peer exchange of messaging in the form of media was interesting. And so many of the conversations that we have now kind of build upon the concerns for access and inclusion from a technological point of view, with also the protection of rights. We also have that discussion now in a very real and present way in the non-fungible token space, of course. But so many of the questions of what it means to have access to creativity and innovation. So not just as a matter of copyright, but also patented software protocols, the patentability of software, some of the limitations there. And so those were a lot of the questions early on that I was navigating. It's interesting that also, I think it was in 2021 that I was appointed to the board of the Maker Foundation. Maker is a decentralized finance platform, had a governance token, MKR. It also was responsible for a stablecoin DAI. But it was interesting to see not just the conversations in the NFT space, but what it also might mean in the DeFi space, as again, there's this collaborative nature, but also some type of a competitive nature when you think of the capitalism, I should say, and building and trying to monetize in the space.
So you're clearly well credentialed in the blockchain and crypto space. So I'm going to ask you like a very basic question here is, can you give us a definition of crypto? Because I think for a lot of people, it's just Bitcoin. And I started around the same time as you did, 2017. And for me, it was just like Bitcoin. But that's not really a definition. I mean, it's just like, an example of a cryptocurrency. So as a subject matter expert, can you give us your definition of what crypto is?
Yeah, when I think of cryptographically secured digital assets, even more than currencies, because even cryptocurrency is a bit of a misnomer, given that crypto assets are taxed as a capital asset, right? So I think the original vision from Satoshi's white paper is that you would have peer-to-peer cash, but so many people are not in the United States. We could talk separately about those outside of the United States. But generally speaking, when you have a virtual currency, the ability to, on a peer-to-peer basis, do the same thing that we are generally required to do with government issued money, also known as fiat. So let's use the United States dollar as the example. It is a centralized way of kind of controlling the flow of value more broadly than just money. So when I think of crypto assets, I think of an asset that can function as in a roughly analogous way to a stock. You don't have ownership in a company, but because it's taxed in that way, we might think of it that way, but also something that's programmable to act as a medium of exchange, as a unit of account, 1, 2, 3, 4, all of many of the same facets and features of physical currency or government issued currency. There are many of those same things that you could do with a cryptocurrency. One of the major distinctions is that instead of being controlled by and issued by a government, you have what we might consider a private type of currency that that is not beholden to a particular border. I think this is a particularly prescient example and an important time to talk about it when there's so much unrest and political disruption, both here in the United States and certainly around the world. I travel a lot. And so the idea of having in the future, if I imagine a world that I would love to live in, a currency that is not beholden to a particular government. Now, that does not make governments happy, but that is what I think about when I travel the world and see a Bitcoin ATM. Or to your point, so many folks focus, and to some extent necessarily so, on kind of the OG in the space. It's not the first digital currency. We have like DigiCash and other things that predated it, Color Coin, I remember. But for Bitcoin, it was the game changer because of this novel combination of some existing technology, cryptography, which is where crypto comes, and cryptocurrencies, which really is, it can be it doesn't have to necessarily be a sophisticated way to encrypt messages. And now the messaging deals with value, not just information. And then peer-to-peer technology, the internet, of course, and a method of coming to agreement of what the truth is, we call it the state of the truth. What are the transactions and balances in real time? And also in a way that is protected from intrusion by government, disruption by natural disaster. I liken blockchain, in fact, in a very rudimentary way, so hang with me, but like a group text. This is how I explain it to my family and friends. If there are 10 people on a group text and one person deletes it from their phone, as long as the 9 others still have a record of it, you have a persistent record of what was said. Now extrapolate that out to hundreds of thousands of computers around the world, and dare I say millions. That is a powerful example of how you can have a system of value exchange that isn't beholden to a country or some type of mega conglomerate of a corporation that often acts like a small country.
So you brought up some good points there. For some people on the other side of the fence, they might argue that for a government to have that kind of control is paramount to be able to do things for the economy that might be perceived as positive, as far as like the control or the money supply and having it, go up or down depending on the circumstances of what's going on in the economy. And I think that's something that's really relatable right now because there's a persistent issue of inflation, which might be tampered down at this point of the recording, but was something that was very persistent. So how do you respond to that? Is that decentralization necessarily like a good thing to have, in the sense that the government kind of cedes that control to a decentralized authority where they can't really control those things?
Well, it's an interesting point if we kind of imagine a world in the absence of government issued currency. And I think as long as we have communities and we have countries, you necessarily have to have, it comes back to trust in some ways, that we are turning over trust in a representative form of government and buying into and participating in a government for the greater good. There's always been some form of that, even when we didn't have organized formal governments, that even smaller communities and tribes had their own system of governance. And part of that has always been some type of financial benefit and some type of financial management. So I think that point is well made. And I would not want to live in a world in the absence of that, where there was utter chaos, right? But I also am very concerned with financial privacy. And it requires a great deal of trust to participate in government and know that you can be equally represented. So, for example, I'm a Black queer woman in the United States. I have a tremendous amount of privilege because of my educational background and because of money. My father's a surgeon. He was a state representative in Maine. My mom's a patent attorney. They're both retired now. I went to private schools. I went to Northwestern. I was the editor in chief of my law journal. I have a great deal of things from an educational point of view. I also have, because of the color of my skin, have dealt with innumerable things that if you had one example in particular, buying a piece of real estate with a bank that had managed my money for decades, and the ringer that I was then put through in order to purchase a piece of property for me and my position. It's like, if this happens to me, there's obviously some kind of discrimination. I think it's hard for everybody for the bank, particularly if they know that you are in any way related to crypto. I don't sell crypto. I'm not hustling crypto. I'm not a Forex trader, but some of the things, and there are many studies to show that someone with my same portfolio and my pedigree, I'm using air quotes again, would have no problem and a great interest rate. But I had to battle things that make you wonder why someone from my point of view would have those difficulties. And that's just one example. So the power that comes with, it doesn't matter who I am, who I love, where I live, as long as either I have an asset or I don't. And I was able to walk away from a deal and finance it myself because I did well in this space. So for those people who are outside of the traditional finance system and have found it difficult to accumulate wealth in the traditional metrics, what does that look like? Gainful employment that would give you access to retirement benefits, the American dream of buying a home, the ability to first create wealth that actually works harder than I do, that has a return on investment. So it's not about being well educated and a high income earner, because income is taxed at a higher rate. To really build wealth and to pass it on to generations, you have to participate in capital asset accumulation and really get a strong return on investment. So I approach it as a both and when I think of how to leverage fiat when it is necessary, and to respect a system that has to calibrate it for the optimal good for the country that I've chosen to live in, but also to be empowered as a citizen, as a matter of self-determination, financial privacy, that really comes from the self-determination and self-sufficiency, which is why I'm so personally drawn to the crypto space.
That's one of the best narratives that I've heard making the case for crypto. I definitely want to go back into that. You did touch on something that's really interesting, which is something I've personally experienced, is that there is this kind of like negative stigma about crypto when people hear that you're in that space. And like the elephant in the room question is that realistically, when we hear about crypto, it's very rarely in a flattering way these days, especially with FTX, that trial going on.
Right.
It's smuggling, it's nefarious. That's the perception that people have about it. So you've talked about the problems that it's solving, but how do you address some of those concerns?
Such big concerns, obviously as an attorney, I'm licensed in 4 states to practice law. I have no intention of involving myself in anything that would cause me to derail 25 years into my career at this point. And I'm actually, I know people can't tell, and perhaps you're this way too, I'm probably one of the more risk-averse people. So people ask me all the time, particularly when they knew me in my former life, what's a girl like you doing in a place like this? Right? And it's a great point. And I've spent a lot of time reflecting on it too. I actually am grateful that I am in the space, because when we think of the crypto contagion of 2022 and we think of Genesis, we obviously think of FTX, it's problematic. Particularly coming off the heels of a bull run and all of the enthusiasm and so many people not knowing what they were doing, getting into the space, kind of relying on the, Tom Brady's of the world and the Super Bowl ads to say it must be safe because those really smart people are doing it. And that's always really, really a dangerous thing. So taking that responsibility very seriously is very important. Everybody doesn't feel the same way I do. And when you have anytime you have the ability to have a quick win, significant gains in a short period of time, you're going to have scammers. Scammers going to scam. And when I think of Sam Bankman-Fried as the example, what he is accused of doing is garden variety fraud at an extremely high level. It's defrauding, if proven guilty, defrauding and misleading consumers who trusted that platform. It's like engendering trust in a world that was built on trust in the software, not in a person or in an entity. Right? It's not really the absence of trust in the crypto space, but trust centered on something we all can see and we all can participate in, so that we're making informed choices. What SBF is accused of doing is saying, come on in, the water's fine, leave your assets here. Oh, by the way, I didn't tell you, but I'm going to send this to Alameda, and I'm going to engage in some risky stuff. And when the bottom falls out, you're going to get left holding the bag, right? That sounds really familiar. Lehman Brothers, Bernie Madoff, etc. That's not a crypto problem. That's a fraud problem. That's not to say that there's not fraud in the space. And I work with, actually recently I was appointed to the Digital Currency Group board. So DCG is a holding company for companies like, well, formerly Genesis, no longer, CoinDesk, like Gemini, so many, where there's so many great actors in the space. It makes me think of Coinbase, who want to get it right. And when you have clearer rules for the ones who want to get it right, it pushes those who have nefarious purposes further away. Right now, it's hit or miss from an SEC perspective, from a CFTC perspective, because the CFTC doesn't even regulate spot markets. Our regulatory environment is, I think, even making it easier for criminals to scam in the area. I think it's dramatically overblown in terms of the presence. We might think of some of the statistics coming out of Chainalysis that show that even if we're overestimating, probably only about 2% of crypto transactions are involved. But when they are, it's a BFD, right? It's not insignificant, and it happens really, really quickly. So I think the closer we get, it's a long way around, but it's a complicated issue to answer. There is no room for scamming in this space. And the purest version of crypto, out of all the 30,000 plus different types, when you think of kind of like, I'm not a maxi, but a Bitcoin is special. And when you think about the original pure cypherpunk ethos about why peer-to-peer cash should exist, it shouldn't be for centralized exchanges at all anyway.
Yeah, and I think the interesting thing is that when you mention some of those names like Bernie Madoff and the Lehman Brothers, and some of those other organizations from like the late 2000s, the thing is a lot of those things were going on for like a long time, or even thinking about, especially with Bernie Madoff, from what I read, it might have been like, since like the 70s. And I think one thing that people kind of overlook and don't understand sometimes, that aren't really familiar with this space, is the fact that with crypto and blockchain, like there's a greater sense of transparency to be able to see those kinds of things. So I would almost argue like the worst place in some ways to do something nefarious would be on the blockchain, because everything's documented on there and you can follow the path. And I also remember, maybe I'm not remembering exactly right, but when that whole SBF thing and FTX thing was going on, there was some transactions as far as like money being moved around, and people could kind of trace it, and they were tweeting about it. And you wouldn't necessarily be able to do that in like the fiat world, just because everything's very centralized. And there's only like a few stakeholders and gatekeepers that have access to that information. So my thesis kind of has always been, if like you want to do something, not that you should ever do something fraudulent.
Right.
I'm not advocating that in the least.
Right.
But like if you really want to, blockchain's probably one of the worst places to do it, because it's just like so easy to query the blockchain and just see what's going on. And yeah, it's just like, to me, I think it's kind of like one of the worst places to do it. So it's almost like it's helping solve a problem. To your point, maybe only like 2% of like the transactions there, if that, are like fraudulent, but they really get a lot of attention. I think a lot of that has to do with the nascency of the space, and also the fact that a lot of people don't know a lot about it. So it's like the media can write something about it and becomes very clickbaity. And, and then when you have something with SPF, there could be something juicy if there's like another person involved in a romantic relationship, and you can spin that in a whole bunch of different ways.
And then his parents and professors. It's right. It's a made for TV movie that I don't want to see.
Yeah, 100%. So, there are a lot of people, obviously, who are still crypto curious, though. But like as you described, there's some pitfalls along the way, potential pitfalls and potential missteps. So, in your estimation, should people kind of just wait those things out, like for those kinks to be ironed out before getting into the crypto world? Or maybe just like get in it right now? And if the answer is get in it right now, like what are some recommendations that you have for people who want to kind of like onboard safely?
Yeah. In 2020, I opened the Advantage Evans Academy to have a learning portal separate and apart from my work at the law school, because I love my blockchain, crypto, and law courses at the law school, but I want to actually connect with people who are curious. They tend to be, I'm a Gen Xer, so people see me, women, people of color, although it's not limited to that. When people see me and they trust me, they're like, well, she doesn't appear to be crazy. So I'm going to give it a shot and try and figure this out, because if she did it and she seems kind of bullish, maybe that is important for me. And I encourage people to even just search the intersection of blockchain and crypto and your particular industry to see what's going on in the space. That was the thing, again, that brought me in to say, wow, there's some really interesting things and important questions in intellectual property. I need to learn a lot about this area. I will never know all the things about all the things. You and I spend our time all day, every day, and twice on Sunday in the space, and I'm learning something new every day. And I'm so grateful that I started when I did, 6 years ago at this point. But look how much things have changed. If I were just starting today, then I feel like I'm drinking from a water hose, a fire hose, really. And every government, including ours, is, at least exploring the idea of a central bank digital currency. There's so many ways that we are digitally moving value already. We have a range of options. If I don't have physical cash, or it's not expedient, sometimes I need a wire, sometimes I need Zelle, sometimes I need Cash App, right? There are a host of ways. This will be yet another way, and an important one, as we go forward, for the economy to be at least conversant with the language of virtual currency, so that we can make more informed choices. The reason, that I wrote Digital Money Demystified, because I was answering the same questions over and over again, to get people to a point of clarity and safety, so that they could be more confident going through YouTube University and listening to podcasts and reading, right? And not taking the head fake of some of the clickbait that you were talking about earlier, right? Which, when you think of fear, uncertainty, and doubt, or FUD, some things are just ill-informed and some things may be intentional. I don't have my tinfoil hat on today, but, I have my own theories. But we can at least dispel some myths and operate from a central point of truth about the environment, about whether or not what the nature of volatility in crypto and what it means, and whether volatility for a nascent asset class is even a bad thing. So comparing it to things that people already know, or what we've already talked about, is crypto just for criminals, or is it all just one big scam? With over 30,000, probably at this point, almost 40,000 different types of coins and tokens, or even distinguishing between what's a coin and what's a token. Some people use the terms interchangeably, but when you think of a native currency of a blockchain versus a token that is storing its transactions and balances on an existing blockchain, right? Those are the things that give people more confidence to lean in and at least learn. To your point about whether you learn and then enter, it depends on your risk tolerance. But I never learned more than when I had, $10 of Bitcoin in a wallet. And then I'm like, okay, I did it. Now what? right? I was forced to because I had a little bit of skin in the game. And that's also what I love about the crypto space. You don't have to, people ask me all the time, what is the minimum investment? It's like, well, this is not a money market fund, right? This is not a mutual fund. This is not a retirement account. You literally can buy $1 worth on Cash App and then just like figure it out. But the real power is when you know the difference in the different types of wallets. What's a hot wallet, warm wallet, cold storage, the responsibility of being in charge of your own money messes a lot of people up because we are not raised to it's like, don't worry your pretty little head. You're going to get your bank account. God bless you if you have some checks. I don't know. And then you're going to hire a bunch of people to tell you what to do with it. We're going to give you a 401k or 403b, and you're going to have to make some choices, but you're not really going to know what it is. And you're not going to read all that stuff. So just pick this one that we've already designed for you. But what power if we were able to speak this language and navigate our financial and investment world from a position of strength, that we get to ask the questions, that we get to balance a portfolio that a small part is invested in crypto, but it's balancing out with other broader assets within a portfolio, right? So those are things that I've learned personally in my life that made my life richer, not just as a matter of the bottom line, but my confidence in engaging in this and really being ready for whatever the future of money is going to look like.
So I don't want to dig too deep into this, but just like in the current state, would you say that crypto is kind of like a high risk, high reward? So don't make it too big of a part of your portfolio, or what are your thoughts on that?
Well, I just feel like, the crypto ecosystem has a life cycle that we have enough historic, even though, again, it's in its we're in the early innings still, right? But when we have not insignificant amount of historical data for Bitcoin, for example, the case being made for hard money, the case being made probably, I think it doesn't really function well in the United States as peer-to-peer cash. Don't at me. I get it. I know people are using it, but functioning at least at this point in its history more as a store of value until that volatility maybe over time starts to stabilize. And it still feels like not legal or financial vice, but it has a lot of room to run. Because when you have a hard cap and you have 19 million Bitcoin already in circulation, but most people still don't know about it, that makes really interesting in the next 5 to 10 years. But when you also look historically at some of the financial data and how it moves and start to analyze bear versus bull cycles, with Bitcoin in particular, when you think about the halving or the halvening event, another one will come in 2024. What happened for the last 3? What does that say if you're trying to predict what will happen in the future? How long do bear markets tend to last? What is the interrelationship between the crypto ecosystem and the larger macroeconomic world and realities, right? So we didn't see the curveball of the pandemic, for example, but my 403b wasn't doing particularly well either. So all of those things play into my advice to my students at Advantage Evans Academy. It's not timing the market here. It's a 24/7, 365 market that does not sleep. It's more about time in. I believe more in, I don't know, I call it dollar cost averaging, but that seems not appropriate. Maybe Satoshi cost averaging. We don't know, right? But the set it and forget it type of thing, paying attention to where there's an opportunity to buy if you believe the fundamentals haven't changed. If something about a coin or a token fundamentally has changed, then maybe you pull back. But if the fundamentals haven't changed, but the world has, then maybe that presents an opportunity to be greedy when others are fearful and fearful when others are greedy, as Warren Buffett would say. So those are kind of my musings as I work with some of my VIP clients to talk through what their position is, what their risk tolerance is, what their short and long-term goals are. Are they going to be a hodler or hodler? I don't know what we're calling it these days.
I don't know what to call it either.
Right,
yeah.
right. I'm going hodl. Hodl seems a little weird.
I like that too.
But that's part of the beauty of really participating with an intentionality, and then leaving space for the curiosity, being able to shift and pivot as circumstances change. I'm a big believer in a little over time will mean a lot in the long term. And that's more of I call it like prudent crypto investing. Some people have challenged me saying that's an oxymoron, but I believe in that. I'm a prudent crypto investor.
Yeah, I'm the same way too. I'm risk averse, as you said earlier. That was a very safe assumption, and I put into it what I can afford to lose, right. And I have similar to you. I see a lot of parallels between crypto and the stock world in the sense that over a long time, getting tongue tied to over a long-term time horizon, I think you're going to get a pretty steady return. I don't think there's enough data yet to say like what that percentage is, but for stocks, they say it's like 8 to 10%. I suspect for crypto, it's going to be more than that. But I think it's all about like the time horizon that you stick around. So if you're looking at it in like a 1 or 2 year horizon, you're looking at like negative 50 down.
Right.
But if you're looking at it over like the course of like 30, 40 years, I have no doubt that it's going to, I could say I hate to speculate on this.
I'm with you. I'll go on that limb with you. I'll go out there.
Yeah, I think it's going to be more than stocks, if we're being honest, over a very long time horizon. I think it's all about what your goals are. So if you're looking at retirement next year and maybe, crypto might not, you'd still want probably a little bit, but not, like 90% of your portfolio or anything crazy. You might be a little bit more conservative, have a lot more bonds in there. And in the same respect, if you're just a younger person starting out in your late teens, early 20s, I'd probably put a healthy amount in there and just let it roll. Along with other things, diversification is very important, of course, too. So I know you've got a book coming out on October 24th, Digital Money Demystified. Can you tell us a little bit about that? Like, who's the target audience and where can people find it? And what's it about?
Yeah, I'm really excited about this. I sat down to think I kind of put myself back in the shoes of Tonya back in 2017, 2018. Like, first of all, why? Once I understood the why, then my intellectual curiosity was like, okay, I got the why at a high level. I know more today than I did then, but enough to say, okay, now who, what, where, and when. And then I'll get to the how, right? And what did I need to what fears, limiting beliefs did I have to challenge and to get more information about to make myself feel comfortable personally, because I had a huge responsibility professionally to train the next wave of lawyers to be conversant in the space and be prepared to represent the folks who were building in the space. That was really my hook or my entry point. So what did I have to figure out? Is crypto for someone like me? So assessing and challenging this idea of the crypto bro myth, and not the origins of it. Because certainly when I think of the tech world and the finance world and kind of them coming together and having this baby called crypto, there's already significant underrepresentation of diverse groups there. So why would crypto be any different? But I was very well received. I came into a space where I was often the only person who looked like me. And you come in with the right mindset and a curiosity, and people, particularly earlier, it's a little tribal now when you think of various tokens and coins, but having I didn't get the impression that it has anything to do with race or gender, but just which token are you rolling with, right? Which is different. So I get that, but would I be comfortable there? Will I be received? So is this more for someone else? And that helped me navigate. Is it a passing fad? Is it a bubble waiting to burst? Because everybody was comparing it to the .com boom and bust. And I feel like when people say that and they kind of like laugh like it's a high school, lunchroom, it's like, haha, isn't it funny? They're stupid. Then it's like a lazy way to approach it. I have great respect for those who said, I did my research and it's not for me. Great. If you're operating from a position of education and you have enough to say, I've looked at it and my discerning nature says it's not for me, great. But so many people are dismissive because it's easier than learning and doing the work. And so that is something that I had to push past as well. Is it too complicated and difficult to use? I have two boomer parents that are very excited about crypto, and they talk about their little wallets and what they told their friends. If they can do it and I can do it as a non-technologist, you can as well. And then certainly as a lawyer, for example, because there are 10 myths. And so I'm kind of ticking off a few to give you an idea of what I cover in the book. The idea of regulation earlier this year. So many people say crypto is wholly unregulated. And I think that particularly in the United States, there are gray areas in need of attention, like yesterday. But ask Sam Bankman-Fried if we have any rules. And he would say, well, there are one or two rules here, even though he tried to navigate in between. How as a matter of taxonomy, is crypto a commodity or a security? Well, it's programmable and it depends, and it actually can change character. And let's analyze what exists here in our alphabet soup of regulation and the legislative committees and subcommittees that are kind of wrangling for position and figure that out. So I wanted to give people a better landscape, and then spending a lot of time on, is crypto just for criminals, too volatile, bad for the environment, right? Anonymous and untraceable. You and I talked about that earlier when you think of following the money. It's one of the easiest things to trace. It may be one of the easiest things to perpetrate a fraud or crime initially. But when people, as a matter of forensics, when people start putting things together, I feel like the DOJ is getting really good at that. So those were the things that I wanted to focus on. The first chapter is separating fact from fiction and setting up the nature of trust, comparing the US dollar to cryptocurrencies, Bitcoin in particular. Like, the dollar hasn't been backed by a physical commodity for decades. Based on the full faith and credit of the government, we've had bank failures. We've had a downgrade in US debt this year. We're going a looming debt crisis. Like, this is not sustainable. So the hedge against even the unrest is a good way to have a little skin in the game. I wanted the average person to have a foundation to then go forward, because the last chapter is, how do you go safely from cash to crypto? And what are the first few things that you should do? And what are some vetted resources, and how to vet the resources of the future, since that changes as well. And then it's like the thing that you do before you maybe take in a trading course or something that's more sophisticated, or learn more about decentralized finance or NFTs. Like, this is the starting point. This might be the Genesis block. I don't know. I just made that up, but let's go with it. This is the Genesis block for your crypto education. I like it.
Can we expect an NFT version of your book?
Yes. I would love that. It's funny because I had these 3 courses early on with Advantage Evans Academy. The first is From Cash to Crypto. Then I did the NFT law guide for creatives and investors. It was just a course, and I'd like to build that out with NFTs. The NFT, it moves so fast. So it was challenging to commit something to writing, which is also why you ask where folks can get the book. You can certainly get it at any major retailer, Amazon, Books A Million, Barnes and Noble, etc. You should start at digitalmoneydemystified.com, because that is the companion website to the book. So, I set some things in writing, but as things change, I have a membership plan, monthly, annually, a lifetime plan, where you can always be connected to the updates, because without the updates, you're it's a moment in time of truth. But as the things change, you want to grow and evolve with the space as well.
That's such a good point. I wrote a book back in 2017 about smart homes. And it's like, I look back and read it now, and it's just like so dated. And I didn't have the foresight to do what you did there, which I probably should have done. So.
Live and learn, my friend.
Live and learn. Yeah, but I really love what you said about your book there and the way that you wrote it. And I totally agree. It's okay to do your research and say, like, hey, this isn't for me, if they read your book.
Mm-hmm.
But at least you've done the research. And I think oftentimes the lazy way is maybe to read a few headlines and then kind of just dismiss it off the headlines. And not to get too philosophical, but I think oftentimes that's kind of like a problem in this world too, is that people got to just take that, path of least resistance and rely on some heuristics to take some mental shortcuts and just say, you know what, it's not for me. Whereas with crypto, I'm not going to say it's for everyone, but I do think that there is a lot there that, like we've talked about throughout the course of this podcast episode, that there's just so much to unpack in terms of things that can be done, and not just necessarily limited to like cryptocurrencies, but just blockchain technology in general, where you need that, single source of truth that you can really rely on that we don't quite have yet. So yeah, I love that. I will be sure to include some of those links in the show notes, and also including your academy as well. Professor Tonya Evans, thank you so much for hopping on the podcast and enlightening us about crypto and blockchain technology and sharing your wisdom. I wish you all the best in the launch of your book.
Thank you so much. I appreciate you.
And that was our conversation with Professor Tonya Evans. And I will say, as a podcast host, she certainly did not disappoint. I'd love to have her back on the pod again. I would strongly recommend ordering her book, which is available at all major bookstores, including Amazon. I bought a copy myself, and I think it's a good read for people at all levels of crypto. And if you have people in your circle that are crypto skeptical, I would certainly give them a copy as a gift. All right, here's an update on the podcast. I've been getting a lot of pings about being able to mint. So, short story, we've made every episode available to mint, and it's been free-ish. And this season, our provider of choice was Nifty Gateway, and that relationship ended a couple months back. So we're looking for a new partner, and I think we found that partner. So just stay tuned. You'll be getting an update via Twitter, so notifications on within the next week or so. Now, after this season, and you've been seeing teasers about it from me, we are in the process of building, we're actually almost done with it, building a podcast player called Scoop 3. Scoop 3 is what you can say is a blockchain-powered podcast player. So what'll happen is that you listen to an episode, and at the end of the episode, it'll automatically mint for you. Of course, we'll be using the podcast player at the blockchain experience, but the way we've built it is that any podcaster can use it. I mean, any podcaster. Super easy to get onboarded. It's free. And the way we've built the listening experience is you don't need to be crypto savvy at all to use it. So you don't need like an Ethereum address. If you have one, we can use it, but you don't need it to use the podcast player. We've got an alternative way of storing your collectibles. We've been really deliberate and thoughtful about the user experience from all angles, whether you're a podcaster or a listener. And although it isn't ready yet, in all the partners that I've talked about in terms of like the user flow, investors that I've talked to, everyone is really excited about it. I'll be frank, we have really big ambitions about where we want to go with it. So I'm getting super passionate about it. There's just some insane things that can be built on top of Scoop 3, but I'll save all that for another podcast episode. Anyway, the way we're building Scoop 3, as you can probably tell, is that we want it to be the podcast player of choice for everyone, not just for those folks in Web3. So I'll end it on that note. It was great catching up with you all. We'll talk soon, and until next time.
Welcome to the blockchain experience. Bringing dope content to the audience. Welcome to the blockchain experience. Bringing dope content to the audience. It's the blockchain spell. Made of David's got so much to tell. Bringing you the latest news without fail. Hey, decentralized and secure. It's been making waves. You can't tamper with data. It's not the same old way. From finance to art, it's bringing all the trust. The blockchain experience, it's a must. Hey, welcome to the blockchain experience. Bringing dope content to the audience. Welcome to the blockchain experience. Bringing dope content to the audience. It's not just for the big boys, it's for everyone. It's a new way of doing things. It's second to none. So jump on board, join the revolution. It's a blockchain experience. It's a movement. Give it up, give it up, give it up, give it up, give it up for the blockchain experience. It's a game changer. it's a game changing. Welcome to the blockchain experience. Bringing dope content to the audience. Welcome to the blockchain experience. Bringing dope content to the audience. It's the blockchain experience. It's the blockchain experience. It's the blockchain experience. Give it up, give it up, give it up for Major David. Give it up, give it up, give it up for Major David. Give it up, give it up, give it up for Major David. Give it up, give it up, give it up for Major David. Welcome to the blockchain experience. Bringing dope content to the audience. Welcome to the blockchain experience. Bringing dope content to the audience. Welcome to the blockchain experience. Bringing dope content to the audience. Welcome to the blockchain.